Hello and welcome to Express Extra from the Exchange. Well, literally the Exchange Bar here at the Awori Stanley Hotel. It was where the original Nairobi Stock Exchange was formed, and the traders came here until the 1990s. There's a bit of tradition as well. This is the bell that used to start and stop trading. It's still here. Now when it rings, it means you've got to buy someone a drink. It gives me great pleasure to declare the market open. Last week I was given the honour of opening trading at the Nairobi Stock Exchange. It may be an all-screen trading system, but they still like someone to ring the bell. Now let's go and make some money. What for you is the most significant part of the exchange as you look at its positioning within Africa?
Today, the economies of Africa are in need of capital, and there's only so much that you can do through debt financing. So we're looking for avenues that you can use capital markets solutions to achieve that.
You haven't done an IPO, for a big IPO or a decent IPO, for a long time now. We have IPOs every week, every day on the New York Stock Exchange or the NASDAQ. You need, surely, to get that going, that pipeline going again, don't you?
Well, we've certainly been watching that as one of our key objectives, and what we've realized is that we need to create the next phase of companies to the market. Now,
But they're going to private equity at the moment.
Right now, there is a bit of flow into private equity. Most of them are still holding them as family businesses and small startups, but we are looking at how can we create a sort of an experiential platform for these companies to be hosted on the exchange and not necessarily be listed immediately, but go through an equity journey, right from what it means to be a listed company, how do you change your governance structure, eventually how do you access capital. So it's about getting ready, getting fit, and getting value.
The evidence of the past is everywhere. One of the original stock certificates, ironically, from the Chinese government. And how about these fans that were used in 1952 to keep Princess Elizabeth cool? In those days, they were being operated by a man on a bicycle. This is all a brilliant place for us to talk about Kenya's economy with none other than the governor of the central bank, the man who's just lowered interest rates.
There was a time that we were aggressively going after inflation. And that was a time when prices were rising quite sharply, and therefore we had to deal with inflation right away. And one of the ways we dealt with that was increasing rates. And we did control that, and now inflation expectations are well anchored.
Subject to the data, are more interest rate cuts on the cards? Is the trajectory lower in the cycle? Are you in an easing cycle?
I think looking forward, there will likely be prospect for easing rates. And the reason for that is also that we have had a very tight monetary policy and a rather loose fiscal policy. So there is a lot of scope for rebalancing. So fiscal would need to tighten up, meaning more consolidation, and that will provide us even more room for reduction in interest rates. I think there's so many shocks that are coming into the economy that I cannot look at the interest rates by itself. And that's the issue.
Which shock are you looking at?
The shocks that I'm looking at, for instance, are the shocks from the external sector in terms of the increase in interest rates in the advanced economies. That is a major shock to most emerging markets and indeed frontier economies like ourselves.
The more you lower rates, the closer and tighter the spread over the US rates. Therefore, the worse that situation becomes for you, because at 9%, you are offering a very healthy premium.
How you lower rate, in the pace at which you lower rate, is what you have to determine so as not to be caught by the increases that we will be seeing in the advanced economies. But again, for us, this hasn't been a significant
yet.
It hasn't. Well, the point is we also need to anticipate things and play accordingly. And the issue for us has been, can we differentiate ourselves? That said, it's important to know that we don't have that much in terms of portfolio investment total that is held by foreigners, or for that matter in the security exchange. So in that sense, there's a local bias. which has helped us, in a sense, navigate these choppy waters.
You're hamstrung by this 4.5% interest rate cap over base. Are you in favor of this?
Interest rate caps are quite distortionary. And we have actually made the point that now that we have been implementing them, they are strangling the economy.
When they introduced the caps, this is my language, not yours, Governor, you would never use such vulgarities. But when they introduced the caps, they buggered up monetary policy and the ability to make freestanding monetary policy.
What we've said is that it has complicated monetary policy.
That's a much more elegant way of putting it.
That's correct. But I think the bottom line is that monetary policy has become hamstrung. And in effect, we have even seen evidence of it being perverse, or perverse reactions to, let's say, cutting of interest rates. So in that sense, monetary policy has really been muted, and indeed has been constrained dramatically.
Are you still in favor of the dollar being the world's #1 reserve currency?
That actually has been called to question recently, and I think it is because of the political dynamics that are surrounding the United States, and also maybe difficulties in trading through the dollar.
But when you get governments targeting, whether it be the Russians or the Gulf countries or China, targeting, deliberately wanting the dollar to be weakened in a reserve sense or supplanted as the world's #1 reserve currency, is that realistic?
Let's put it this way. The US dollar has had a history, and you cannot turn back that history. And so, in effect, when you have those other players that want, in a sense, to undermine the dollar, and that privilege, exorbitant privilege as it is called, I think, in a sense, it will probably lead to more geopolitical instability. So I don't know. I don't know if I would want to accelerate it. I think there's a natural progression. There's a organic sort of development, but I wouldn't go after the US's dominance just to make a point, as it were.
Remarkable honesty and openness from a governor of a central bank. Jeremy Awori, the CEO of Barclays Kenya, was certainly surprised at what the governor said.
At the end of the day, when investors are coming to invest, they're looking at returns, and they're unemotional about returns. So if you reduce returns to such a point that it's not attractive for frontier risk, then we're going to run the risk of not attracting foreign direct investment into the markets.
If I look just at the raw numbers, unemployment, inflation, GDP, this economy seems to be doing reasonably, rather well. So what are you worried about?
I think what we're seeing is we're seeing GDP growth 6.3% forecast, which is very positive. I think a lot of that has come from the public sector investment. We need to see growing private sector investment coming through as well as part of that number. The deficit actually has been reducing, but it's still quite high as a number, that we need to address. I think what I would like to see is I'd like to see a growth in contribution of the manufacturing sector as a percentage of GDP. We'd like to see growth in exports, because that also brings in foreign exchange to pay some of the debt repayments that we've got. Just a fundamental, strong, stable economy that creates jobs, because we've got many young people, and we're on that path.
And that is the Express Extra for this week. But before we go, David Njoroge, former general manager of the Awori Stanley Hotel. What is this?
This is a walking stick, a symbol of authority, which I'm going to present to you. As you walk around here, you hold it like this. Here you go. You walk with authority.
Of authority.
As an elder of this place.
As an elder?
Mzee. Mzee means elder.
Mzee?
Yes.
Mzee.
Yes. And I'm also going to present you with something else. This is a chuka. This is supposed to be a blanket. We call it chuka.
Right.
All right? And I'm going to present it to you. Here.
Yes.
So
this is from the
fitting you. This is from the Maasai lad.
From the Maasai, yes.
Yes. So
Maasai.
You see the way it's put.
Stick.
You hold it like this. It goes round. All right. And then You tie it behind, like that. And then you walk with authority. You walk, hold it here, like that.
Thank you, sir.
Then you walk.
Thank you very much.
Welcome.
Thank you.
Thank you.
Ah, suitably attired and robed with my stick ready. That is the Express. I'm Richard Quest. Whatever you're up to in the hours ahead, I hope it's profitable.